Yeah, niggas. Today we're talking about it's still the same day, but like capital stock in Nigeria. It's like apparently Nigeria is different from every other country, obviously. But like capital stock, if you want to for commercial real estate, yeah, um, it's a little similar, to global standard, with much higher cost and tighter bank requirements. So for like Port Harcourt developments now, your primary challenge is the high interest rate. Normal United States is like, let's say 8, 7, 15%. Bro, Nigeria is 25% to 30%. Like they want to almost pay double the money back of what you borrowed. Like so, and the need for like significant skin in the game, which I personally right now I don't have so much skin in the game. I just have theory. I'm reading theory for you guys. So you know, look at my time when I have like most skin in the game. So basically, like the Nigerian capital stock structure is it represents different layers of financing for your project. As a developer now you sit at the top, the highest risk, the highest reward, while the bank sits at the bottom. The bank is always the senior debt, 50 to 60% of the money provided by commercial banks, Access Bank, Zenith Bank, Stanbic Bank. I think Stanbic Bank is a wealth bank, but in banks now, in Nigeria's context now, the banks really lend more than 60% loan to value as LTV, like 60% loan to value. Like that's they require the land with a valued C of O as collateral. You see what I'm saying now? They want like an entitled land. Like they want something that is oh Jesus, like so after the senior debt, there's the mezzanine debt or the preferred equity, which is like 10 to 20%. Like you feel that gap between like the bank loan and your cash. Your cash is the common equity. Yeah, the guy will common equity. Except you have the money to pay the full project. If you don't have the money to pay the full project, you want to like do it. Common equity can be like 20 to 30% your own cash, and that of your core partners. This is the first money in and last money out, and that kind of stuff. So the cash requirements by tenants class. The class of your tenants determines how much the bank will trust you and how much cash you need up front. It's like QSR. It's like a fast food like KFC, Chicken Republic in Nigeria. Those are in Nigeria. You need cash of like 150 million naira to like 300 million naira. Like the financing reality is that there's a high turnover but small scale. You usually need 40 to 50% equity because banks view small buildings as high risk. Okay. So KFC is a small building. Okay. For like let's say a bank branch like GTC or Zenith Bank, the cash you need for that kind of building and that kind of project will be like 400 million to 600 million naira. And banks often prefer to self-build. I think I mentioned this in one of my videos. I just made a video actually right now. So the banks prefer to self-build or lease a shell. If you build for them, they're the best collateral for a senior loan. And like the anchor retail like ShopRite. Something like ShopRite is like it costs like $2 billion. So 2 billion, even the chat shouted. It costs 2 billion naira to 5 billion naira. And it's like the financial reality is like it's massive capex, massive capital expenditures. Yeah, that's capex. Oh my guy, I don't learn all these things. So basically, you need institutional partners in this kind of deal. Except you get like $30 billion, like 30 billion naira for your account, like Davido. You can build like 10 of these, no problem. Yeah, Davido now. It's like an oil and gas multinational like Total. You want to be like a filling station for Total, LNG, like they are. You want to be like LNG, another area for LNG to cost like 1.5 billion naira to 3 billion naira. It's like the highest requirements now. This one has setbacks and security. You need significant cash for like stabilized HVAC and like safety systems before they sign. So basically, like I started looking like let's say I'm in Port Harcourt right now, and oh shit, I don't know why I told my location, but I started. I'm in Nigeria, and there's like a particular place called Transamadi in Port Harcourt, where it has like commercial. It has this kind of commercial area, commercial vibe. So like I checked like commercial listings in Transamadi, and they have like 800 million to 900 million, 5 plots, approximately 2,300 square meters with like a C and O listed for 800 to 900 million. Or there's one in Ordnance Road, 12 plots of land, with a C and O for 960 million. Ordnance Road, like the off. But me, I prefer off market. So what? These ones are listed. But even though if you have it, like you have the money, you have the capital, you have the team, you have the partners, you can get these lands, and again you have connection with the relationship with the banks. You can get this and then build. I don't know. 900. What can you build on 900 million? Something like you can definitely build a bank. You can build like Chicken Republic or like all this fast food something. Yeah. But I'm more of like off market guy because I'm also learning from like my mentor, Jay. Let's call him Jay. He's an off market guy and he does his own code calling. So my own plan is like approach legacy manufacturing firms, like Michelin or old bottling plants in the Transamadi industrial layout that have massive underutilized footprints, and then try and get a sale from the ones they're not really using. So in Nigeria, you also do due diligence. Like there have to be a checklist, like Rivers State Ministry of Lands. You verify your CFO. Follow these steps. Registry search. You conduct an official search at the land registry to confirm the CFO number and ensure there are no caveats, no disputes. Survey verification. Cross-check the coordinates with the Surveyor's General Office to ensure the land isn't floating, on a government rights way. Ground rent status. Ensure all annual ground rent payments are up to date. The government can revoke a CFO for non-payment. So this one is like zoning confirmation. Confirm the land is zoned for commercial use. I made this in another video. If the government say this land is zoned for residential, don't argue with the government. Like we are not here to find the commercial side. It's always better like that because there are other developers that are building the commercial area. So converting from industrial to commercial in Transamadi requires a serious application. Serious specific application also requires money. You will spend more trying to like, and they can actually stress you based on the fact that they know they want this place to be commercial. You want to go and change it, to like residential. They will stress you seriously. So we're talking about time. Yes, save time. Time is like it's also very important. So I have a customized speech here, but like yeah. So basically, like this is like a pro forma, a projected profit and loss now for like a 5 plots. That 5 plots of like 800, 900 million naira. That's 800 million naira. The pro forma now, the projected profit and loss for a 5 plots development in Transamadi. So this model now assumes a 5 plots commercial development in Transamadi targeted like at a corporate tenant, that is an oil services firm or a regional bank. A regional bank is like 500, 600 million, but it could be any of them. So to acquire the land, first of all, you take, when the owners know you want to use this land for build a bank and collect, to acquire the land maybe it cost you like 800 million naira. Market price for 5 plots on major Transamadi Road, 800 million naira. I swear you go hear around. Because that place now, Transamadi Road down, that front side is a hot place. So construction cost now, if you enter like 1.1 billion, estimated 1,000 square meters GLA at 1.1 per square meters, 1 million per square meters, for urban prime specs. And like you have to pay like soft costs and fees at like 190 million. 10% of hard costs like legal, all these lawyers and everything, like agency, approval, remitter. You pay fees, serious fees, like 190 million. Just hold 200 million for fees first. So basically, the total project cost now is ending like 2 billion naira. 2 billion naira is like probably like 1.3 million naira, $1.3 million, so like 1.5. Yeah, $1.5 million. You don't get money for this build your own filling station. Like, but guy, this nigga get money. I know so. Damn, this nigga get money. I know, Jesus. So like for that kind of building now, you can actually make your annual income now. The money you make every rent from the rent now could be like 150 million naira every year. Annual income, like estimated 150,000. 150 for like high spec corporate office, like something like a bank. In PH and Transamadi, the rent 150 million. Like let's say net operating income. I learned this one from multifamily, but like also in retail, you also do net operating income, right, where you minus the annual rental income from the expenses and the maintenance and all those management. That is 10% of that's like 135 million. That is like 10% of the annual rent. What the bank is paying as rent. 10% is like 50 million. So 50 million minus like 150 million is like 135 million. So the projected real yield now is 6.5%. That's standard for PH. I don't know. I need to calculate this again because I didn't confirm this one when I said it. So I'm going to make a proper video with, real slides. I've calculated everything, that kind of stuff. So this one I'm just talking about this. This is the first time I want to make this one, so I just don't want to waste time. So in Nigeria now, we have like top 3 private equity firms for preferred equity. I don't know whether they're top 3 on, but to all the private equities out there, I beg, like, I don't know, I have not confirmed this thing. So in case I come meet you guys tomorrow and say, hey, I need money. I've made some money, I need money. So you guys should, I've not confirmed this information, but for a developer now, preferred equity is crucial because he acts like the silent partner that provides capital in exchange for a fixed priority return before you, the common equity holder, gets paid. So the private equity gets paid before you. The bank gets paid before you. You're the common equity, but you take all the upside because eventually, once you can pay off those debts, you can own the whole property. It's yours. It's your own. So the top 3 private equity firms are African Capital Alliance, ACA. I think they're like the most established player in Nigeria. They have a dedicated real estate fund, CAPIC. I think CAPIC that focuses on high quality commercial and residential assets in major hubs like PH. And there's another one called Actis, which is like a global firm with deep roots in Nigeria. They are famous for the palms and major office development. They provide institutional scale capital for projects with high ESG, like environmental, social, and governance standards. And the third private equity is Vero Capital Management. So while these guys focus on mid-market close companies, they often provide capital for industrial and consumer-focused real estate that supports their portfolio companies. So like you have to actually have like a term sheet, have a way you approach the private equity for your preferred this thing. But like the top, also like before you secure your corporate development in Port Harcourt, you need a team that speaks the language of banks and institutional investors. You need a team, accredited valuers in Nigeria. Before a bank will accept your valuation, the firm must be a corporate member of the Nigerian Institution of Estate Surveyors and Valuers, and registered with the Estate Surveyors and Valuers Registration Board of Nigeria. Whoa, guy, there's so many people to register with. It's crazy. Gary Putu and Partners, that's one. That is a highly reputable firm in PhD line with over 17 years of experience in valuation for commercial and industrial real estate. Jide Taiwo and Co. That was the national sectorial icon with a strong PH presence. Widely recognized as by all major Nigerian commercial banks for formal valuations. Okay, I think I like that one. Adu Imonike and Co. And Abuloma, PH, they are long-standing consultants for commercial and corporate bodies, and Omosigo, Omorodan Partners. Okay, so these are valuers and surveyors and the guys that you go and meet the banks with everything they hold. Before your bank can accept your valuation and trust that, okay, this thing is going to be worth this amount, bruv. It's not you that will tell the bank this is what this is going to be worth. You need proper surveyors and valuers to go and the ones that the banks trust and respect. You get what I'm trying to say? So like the commercial banks active in River State now, not Nigerian, in River State, some of them, there's so many banks in River State, but like some of them are like the Central Bank of Nigeria capitalizes their line. So your bank is blah 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 blah. Access Bank is one of them, it operates like a major regional hub in PH. They are currently the largest bank by assets. I'm already made the 500 billion international capital requirement. I have an account with Access Bank, and I owe those niggas, and they are disturbing me up and down. But like, no, man, you always owe the bank. So very soon you're coming to owe them real debt. Like, you never even start. So like Zenith Bank, I also have an account with Zenith Bank, known for its strong corporate banking capabilities and digital infrastructure in PH. Premium Trust Bank, headquartered in Port Harcourt, Transamadi. As a newer national bank, they are often more aggressive. They are aggressive and flexible in funding local PH developments. Stanbic IBTC, located in GRA Phase 3, while not a commercial bank, they provide short-term, low-interest funding for development that have an industrial or SME hub components. So, this, thank you. That's terrible, Mom. You're distracting me right now. Yeah, so like that's about the capital stack for if you want to be a corporate developer for corporate tenants, that's the capital stack you need. That's a little highlight. I don't need to make the main video while go through the slides and everything. So yeah, that's for Nigeria. Nigeria's capital stack is a little crazy. Bank is to 30% interest rates. That is wild. If interest rates goes up, your the money on the go up, oh, like what the money you're getting paid. So yeah, we'll see you in the next video.